Just take a moment to look at this chart. Look at how many times the price respected this blue line. When the price trades above it, the price finds support 3 times. And finally, when the price broke below it, the price found resistance twice. Now, know what you're thinking. It must be a moving average with some complex calculation, but I promise you it's not. In fact, it isn't even an indicator. Just like the Fibonacci retracement, this is a drawing tool. The name of this tool is Anchored Vwap. It is one of the best tools out there. It has a track record of being better than any moving average and the regular VWAP. We will show you how to use the Anchored Vwap with 3 advanced strategies you have never seen before. Topic 1. What is Anchored Vwap? We are all familiar with the VWAP indicator. It is among the most powerful indicators, especially for day traders. Those who may not know, VWAP stands for Volume Weighted Average Price. You can think of it as a moving average that uses volume as an additional input to calculate the day's average price. VWAP shows us the perceived value of the asset for that day. But the VWAP has one problem. It starts its calculations from the opening of the day. So at any given moment, the VWAP value is only based on the current day price action. But what if we want to look at a broader context? What if we want to use a higher time frame to trade? The regular VWAP has no value for a swing trader. That is where Anchored Vwap comes in. The Anchored Vwap uses the same calculations as the regular VWAP, but it allows you to select the exact candle where you want the calculations to begin. It can give you a better understanding of the value of multi-day trends. It can also help you identify areas where breakouts may occur. Let's understand how to plot it on your charts. Topic 2. How to apply it on your charts. To plot the tool in the chart, head over to TradingView, a free charting website. You can use the link in the description below to sign up and get a 1-month free trial on their premium plans. Once you're on your charts, hover over to the left, where you will see the drawing tools. Then select the arrow beside the second option. To open a drop-down menu now, go all the way down that list and select the Anchored Vwap. You can also click on the star to add it to your favorites. Once selected, you can click on any candle, and the tool will plot itself starting from that price. But plotting the tool from random candles is useless, so let's understand how to use it. Topic 3. How to use the Anchored Vwap. Ideally, we want to plot the tool from major reversal points, or we can also apply them to the starting points of a trend move. For instance, here, we see that the price was in a tight consolidation before it started this massive uptrend. The uptrend actually began from this candle, so we plot the Anchored Vwap from this point. As you can see, it provided support to the price. 2 times the price touched the VWAP and moved upwards. And that brings us to the first use of Anchored Vwap. Topic 4. Use 1. Catching pullbacks. The Anchored Vwap is one of the finest tools, or indicators that you could use to catch pullbacks. Plotting it from a starting point of the trend gives you the asset's fair value within the trend. In an uptrend, when the price goes below the VWAP, this means that the asset is trading at a lower price than its fair value. The big players see this opportunity, and their buying orders take the prices above the VWAP. That's why the Anchored Vwap works really well. Here's another example, this time in a downtrend. From this point, the price reversed and started a downtrend. So we plot an Anchored Vwap from this candle. We can see that the price pulled back to the VWAP and consolidated for a few candles before moving lower. This is because, when the price starts to trade above the Anchored Vwap, sellers are getting a higher price than its fair value, so they jump on the opportunity and create selling pressure. Imagine Someone willing to pay you $15,000 for your used car, when the fair value is $12,000. Would you take such an offer? Of course you would, and that's what the sellers do. They jump on the opportunity and create huge sell orders above the VWAP. That's why you see these down moves. Now obviously we don't blindly enter. Whenever the price pulls back to the anchored VWAP, we also look for other confirmations that we will discuss later in the strategy section. The important point to note here is that the anchored VWAP will provide support to the price in an uptrend and resistance in a downtrend. Topic 5. Use number to breakouts. After a sustained trend, when the price breaks out of an anchored VWAP, it is a sign that the trend has lost momentum, and a reversal may be in the cards. Here we saw an uptrend start from this candle, so we plot the anchored VWAP from this candle. The price found support at the VWAP twice, before breaking below it. Once the price broke below the VWAP, we saw a massive down move that followed. Here we saw a downtrend start from this candle, so we plot the anchored VWAP from this candle onwards. The price stays below the VWAP for a long time, before breaking above. This was the first sign that the price may have lost momentum, and it may move upwards. As you can see, a powerful uptrend follows. So breakouts of anchored Vwaaps are also good signs of reversal. Just like any other strategy, these breakouts also don't work all the time. Sometimes they can be fake. Therefore, it is necessary to add other confirmations to create a winning strategy. So now, let's move on and discuss 3 advanced strategies you can use to trade the anchored VWAP. Topic 6. Anchored VWAP bands. The anchored VWAP can also be used as bands to determine a zone of support or resistance, instead of a line. Here initially we witnessed a huge down move. Then the price stalled and created this high. The price then broke above the high to create a higher high at this point. This might be the start of an uptrend. We select this candle as the starting point of an uptrend and plot an anchored VWAP from here. Next we identify the first pullback in the trend and plot another anchored VWAP from the end of the first pullback. Now, we have successfully created bands with anchored VWAP. On this pullback the price comes near the VWAP bands. We expect the price to find support and move upwards. We also spot an inside bar which adds to the confluence. This now becomes a high-quality trade setup. And as you can see, the price shot up and moved upwards. These bands were plotted in September and October last year. 6 months later, they are still providing support to the current price at the time of recording. This is the power of creating bands with the anchored VWAP. The rules are pretty simple. Identify the starting point of a trend and the first pullback of that trend. Plot an anchored VWAP on each of those levels, and you end up with these bands that can be held for months if not years. Here's an example of a downtrend. At first we saw this massive up move, then the price reversed creating this lower low. We take this as a sign of a price reversal, and plot an anchored VWAP from this top. We then identify this as the first pullback, and plot another anchored VWAP from this point. Now we have successfully created the VWAP bands. As you can see, the price rejected the band multiple times, giving you 3 profitable trading opportunities. In fact, if we zoom out a little bit, you can see an unbelievable sight. These bands were created in May and July of 2021, and yet we saw 2 trade opportunities in December 2022 and January 2023. These bands have not been broken for almost 2 years now. You can check it for yourself. For your reference, this is a 2-day chart of GBP USD. So one candle represents 2 days of price action. I hope you understood the strategy, but we are not done yet. We still have 2 more strategies to cover, so let's move on to the next strategy. Topic 7 Anchored Vwap plus Fibonacci Retracement. Fibonacci retracement levels are yet another tool that can help us in spotting areas where the price might find pullbacks. If we combine Fibonacci with Anchored Vwap, that will give us some high-quality trade setups. The best part about this strategy is that you don't need to find a reversal to plot the Anchored Vwap. We can utilize this strategy in strong, trending markets to catch pullbacks. Here is an example. We see an already established downtrend. The price makes this swing low and makes a pullback. Then, the price breaks the previous swing low on this candle to create a new low. So we identify this high and plot an Anchored Vwap. We also draw a Fibonacci retracement tool from the latest high to the new low. The price pulls back and stalls at the Anchored Vwap. If we look closely, we can also see that the Anchored Vwap converges with the 50% level on the Fibonacci retracement tool. So, this is a strong confluence between the Anchored Vwap and Fibonacci. On top of that, this inside bar also adds to the probabilities. All in all, this was a high probability sell trade. As a result, the price tanked after the inside bar. Our stop loss should be above the VWAP or 50%. On such a trade, we can target the recent lows. Here is a BI setup using the same logic. At this point, the price broke above the previous swing highs to make a higher high. So we spot an uptrend and plot the Anchored Vwap from the starting point of the up move. Then the price makes a pullback and approaches the VWAP. So we draw a Fibonacci retracement. We notice that the VWAP falls in confluence with the 0.38% level. So we expect the price to find strong support at this level. As you can see, the price found support at the exact price level. We also have a morning star pattern, which also indicates a bullish reversal. Hence, it was a high probability trade. As you can see, this trade would have resulted in profits. Now let's discuss the last strategy before we wrap up this video. Topic 8 Anchored Vwap plus key levels. Support and resistance levels are one of the foundations of technical analysis. They help us identify key areas where we might see a price reversal. So it makes sense when the Anchored Vwap falls in confluence with these key levels. It provides us with a high probability trade. Here is an example. This point started a strong down move. So we plot an Anchored Vwap. From here, we expect a downside reversal when the price pulls back to the VWAP. Upon closer examination, we also notice that these two reversals from before help us identify a key level. Now the Anchored Vwap and the key level converge at this point, so this gives us double confirmation that the price might face some resistance and it may move downwards. And that is precisely what happened. Here is an example of an uptrend. Here we noticed that this was a starting point of an uptrend as the price broke prior highs. So we plot an Anchored Vwap from this point. When the price pulls back to the VWAP line, we expect the price to bounce from it. We also noticed that this reversal helped us identify this key level. So now, this level should act as a support. The Anchored Vwap and the support are converging at this point. So, it was a logical implication to place a buy trade here. And as you can see, the price respected the support and moved upwards. That brings us to the end of this video. In this video we showed you 3